Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. Bitcoin and Ethereum have started to recover after a sharp sell-off. But demand remains relatively weak, and talk of a new bullish trend is still premature. Many market analysts believe that the ultimate bottom could form somewhere between 40 and 55k for Bitcoin. From a technical standpoint, however, there are still no credible signs that the broader downtrend in either Bitcoin or Ethereum has come to an end. As a result, our base case remains unchanged. Both assets may continue their corrective rebound in the short term, but larger bearish trend is likely to resume once that recovery runs its course. The key event today is the Federal Reserve's first policy meeting under new Chair Kevin Warsh. Even though Warsh has now been in the role for a month, markets are still trying to determine what his leadership will mean for monetary policy. For crypto, that question is especially important. A more hawkish Fed would likely create additional headwinds for digital assets, while a dovish shift could provide support for a broader recovery. Rather than speculating, traders may be better off waiting for worse remarks later today. That said, there is a reasonable case for expecting the Fed to maintain a neutral stance over the coming months. US inflation has accelerated to 4.2% over the past 3 months, which argues against aggressive easing. At the same time, the conflict in the Middle East could officially come to an end as early as this Friday, potentially reducing one of the key inflationary risks facing the economy. Given those competing forces, we believe that the Fed is unlikely to signal, or even seriously discuss, another rate hike before the end of the year. For crypto markets, that would leave the focus squarely on technicals. And right now, the technical picture remains bearish despite the ongoing rebound. Until key resistance levels are reclaimed and higher timeframe trend structures begin to shift, rallies should be viewed as corrective moves rather than the start of a new bull cycle. On the daily timeframe, Bitcoin has resumed building a bearish market structure. The trend remains firmly the downside. And the charge level has been moved up to 82,800 USD, following the formation of a fresh lower low. Until BTC reclaims and holds above the 82,800 USD, the current downtrend remains intact. Only a sustained break above would invalidate the bearish structure and suggest that the broader decline has come to an end. At the moment, however, there are still no technical signs of a bullish reversal. Momentum remains skewed to the downside, and we continue to expect further weakness in Bitcoin. A new bearish fair value gap has formed on the daily chart between 68,000 and 70,700 USD. While several smaller imbalances can be identified throughout the current sell-off, there is the most obvious and technically significant supply zone on the chart. As a result, any future retracement into this area could attack fresh selling pressure and generate new short entry opportunities. As long as Bitcoin remains below key structural resistance, rallies into bearish FVGs should be viewed as potential setups for trend continuation rather than signs of a market recovery. On the 4-hour timeframe, Bitcoin has entered a corrective recovery after an extended period of downside pressure. The CHOCH level that continues to validate the broader bearish trend remains at 78k, while the CHOCH supporting the current corrective phase advance is located at 60,765 USD. Bearish setups can still be used to initiate new short positions, but the daily timeframe remains the preferred chart for trading in the direction of the dominant trend. Higher timeframe signals continue to carry more weight in the current market environment. As for long positions, bullish patterns on the 4-hour chart can provide valid buying opportunities. However, traders should remain realistic about the upside potential. Strong rallies are uncommon within an established downtrend, and the current move still appears to be corrective rather than impulsive. For that reason, we would not recommend large long positions with long-term bullish expectations at this stage. Yesterday, Bitcoin successfully reacted to a bullish fair value gap twice, between 64,100 USD and 65,370 USD. If additional confirmation develops on the M30 timeframe, traders may have an opportunity to initiate tactical long positions. The upside target is fairly straightforward: the major bearish fair value gap on the daily chart. Until that supply zone is challenged or invalidated, the current rally should be viewed as a correction within a broader bearish market structure rather than the beginning of a new uptrend. On the daily timeframe, Ethereum remains firmly locked in a bearish trend structure. The key CHOCH level is now located at 2477, marking the latest lower high within the current downtrend. As long as Ethereum continues trading below that level, the broader bearish bias remains intact, and there is no technical basis for calling a trend reversal. Price recently reacted with only a minor deviation to the latest bearish fair value gap, a setup that closely mirrored the signal seen on Bitcoin. The alignment between the two largest cryptocurrencies provided additional confirmation that sellers remained in control. As a result, traders had a strong technical case for initiating short positions ahead of the most recent sell-off. The rejection from the bearish FEG combined with the intact bearish market structure offered a high probability continuation setup that ultimately played out as expected. For now, Ethereum continues to trade below key structural resistance, and the daily chart remains titled in favor of the bears until proven otherwise. On the 4-hour timeframe, Ethereum continues to trade within a bearish structure, which remains part of the broader downtrend visible on both the daily and weekly charts. At the moment, the market is showing only a modest corrective rebound. And while that recovery could extend further, there is still little evidence of a meaningful shift in trend. The most recent bullish fair value gap did generate a reaction. But as the price action shows, the bounce has been relatively weak. That's a classic characteristics of a bearish market. Sharp declines by followed sluggish and limited recoveries. In other words, sellers continue to dominate the broader picture, while buyers have so far failed to generate enough momentum to challenge key resistance levels. As a result, traders may consider tactical long positions when fresh bullish patterns or setups emerge on the 4-hour chart. However, these trades should be viewed as short-term counter-trend opportunities rather than the beginning of a larger bullish move. The prevailing trend remains bearish, and Ethereum could resume its decline at any time as long as the higher timeframe structure stays intact. Until the market starts producing stronger bullish signals and reclaiming key structural levels, rallies are likely to be treated as corrective moves within a broader downtrend. That's all for today. See you online soon, and good luck.